Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning. This is Anthony Wolfenden, Tax Financial Advisor. Welcome to Tax Tuesday and Wealth Coffee Chats. Today I wanted to spend a little bit of time going over an experience I had with a client just this week, and it was so impactful I just had to share it. This client was new to property investment, and they were looking to purchase their first investment property, which they've done, and they went to a broker to get assistance, and unfortunately the broker, who was not part of the family, gave them some very bad advice that has cost them quite a bit in relation to tax. And I thought I'd share that story. So in this case, the client's situation was really quite simple. They had purchased their home. They'd done exactly what you're taught to do in school, which is wrong. They'd got a good job. They'd purchased their home. They had offset fully the home loan for their home. And they'd learnt the lesson that maybe you could use some equity to purchase investments to expand your wealth creation. And so they went and saw their broker, and the broker gave them bad advice. They said, yeah, just take the money out of your offset account for your home loan, principal place of residence loan, and you can use that and you can buy the investment property outright without securing or worrying about a new loan. Not a great idea. So the purpose of the original loan was to secure and own a home. The purpose of those funds is not related to the generation of income. And so the purpose of that loan and the interest payments that you make on it is a non-tax deductible expense. As you guys know, for your own home loan, there's no tax claims involved. Because the client had fully offset their home loan and the money was retained in an offset account, that's a separate account in the client's name, those are the client's funds. And so when the money was withdrawn from the offset account to purchase the investment property, essentially the client was using their own money from the offset account to own and purchase the investment property outright. But in doing that, they were exposing the original home loan, whose purpose had not changed, purchasing and securing a principal place of residence, to interest payments. And so they had a fully owned outright investment property and now an extensive amount of debt on their own home. And that home loan is not tax deductible. And that advice was given to them by a broker who could have received a commission for providing a new loan, I guess. So he cut himself as well. And in doing that, because of the amount that was exposed non-tax deductibly to loan interest, the client cost in terms of additional tax required to be paid or tax not refunded is about $10,000 a year. So this is a significant amount of money and a big mistake. And it could have been so much simpler. And so the golden rule with relation to tax and certainly investments and loans is you do not mix loans and offsets that are tax deductible with purposes that are not tax deductible and vice versa. If you have equity in a home, you guys hopefully all know this, and you would like to use it for investment purposes, the money has to be drawn or the equity has to be drawn in a way where there's a separate facility with the bank that is easily identifiable, and the funds and the purpose of those funds can be seen to be securing an investment property, which when made available for rent or rented, means the expenses in relation to that property become tax deductible expenses. And so if you have a lot of equity in your home, if that money is sitting in an offset account even, because that's a smart thing to do, have a nice big facility with a lot of buffer and liquidity lying around, then don't take money out of the offset account. What you do is you speak to a broker or your bank and you ask them to provide an equity draw, a separate new loan against your home. And when you take money out of that, it's easily identifiable. The purpose of those funds were to secure an investment property, which when made available for rent or rented, means that the loan interest on that facility becomes tax deductible. You can do the same thing with redraw accounts. When you have a redraw account, the money you place in that account is seen as being given back to the bank. And so when you request that money be taken out of it, it's actually seen as a separate facility. So that's another way to draw equity from home for use in investments to keep the interest tax deductible. So you've got to do it smart. Don't just reach into your offset account and take out money. Your home loan, not tax deductible, and the offset account associated with it should be used for all of your personal expenses. My kids used to keep their savings in my home offset account so that I could pay them interest instead of them getting savings interest rates at a bank, which is much less. So there's lots of smart things you can do with your home offset account, but taking money out to purchase an investment is not one of those things. So that was an experience I had with a client this week. There's not a lot you can do about it after the fact. He does have a rather large loan against his home, but he owns a really nice investment property outright. So that's kind of nice, but not from a tax perspective. Okay, that's it for Tax Tuesday for Anthony. Hope you guys have a wonderful rest of the week and avoid these very simple things that are very, very costly. Have a great week. Cheers.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.